Most traders think they fail prop firm evaluations because their strategy doesn't work. But when you actually look at why traders fail these challenges, the reasons are usually much simpler. They're trading too big, too often, and without a structure that protects them from themselves. In this video, I'm going to break down the 5 biggest reasons traders fail prop firm evaluations, and the simple fixes that can dramatically increase your chances of passing. Make sure to stick around until the end, and I'll provide a link to some free resources, like a daily trade tracker, and more. So here are 5 main reasons traders fail prop firm evaluations. Reason number 1. Trading too many contracts. The first mistake traders make is trading too many contracts. They see a $3,000 or $5,000 profit target and immediately think, I need to make this quickly. So instead of trading one contract, they jump straight into 3 or even 5 contracts. The problem is most prop firm accounts have very tight drawdown limits. A couple bad trades at that size can put you right at the edge of failing the account. The irony is that traders trying to pass faster usually end up failing faster. The professional approach is the opposite. You start small, you protect the account, and you let consistency move you toward the target. Reason number 2. Overtrading. The second reason traders fail evaluations is overtrading. A lot of traders feel like they need to be in the market all the time, while most professional traders might only take 1 or 2 high-quality trades per session. When traders start forcing trades because they're bored or trying to make something happen, their edge disappears. More trades doesn't mean more profit. It usually just means more opportunities to make mistakes. Try trading with a less is more mindset. Reason number 3. Emotional tilt. The third reason traders fail is emotional tilt. This is the classic revenge trading spiral. It usually looks like this. You take a loss. You get frustrated. You increase your size to win it back. And then suddenly a small loss turns into a huge drawdown. Most prop firm accounts are blown not by strategy failures, but by emotional decisions. Professional traders understand something important. Protecting your emotional capital is just as important as protecting your financial capital. Put some guardrails in your trading rules to help protect yourself from emotional tilt. Reason number 4. Strategy hopping. The fourth mistake many traders make is switching strategies mid-evaluation. One losing day, and suddenly traders think their entire system is broken. So they start jumping between strategies. Breakouts one day, supply and demand the day after, and so on. But consistency comes from executing one approach repeatedly, not constantly changing your approach or rules. Don't mess with the math. Find a strategy that suits you and your personality. Then stick with it and focus more on better execution. Reason number 5. Focusing too much on the profit target. The final mistake is obsessing over the profit target. Traders open their dashboard, constantly checking how close they are to passing. That pressure often causes them to force trades, increase size, and break their rules. Ironically, the traders who pass evaluations the most consistently usually focus on something much simpler: good execution and risk control. The profits become a byproduct of the process. So if these are the common problems, what's the actual solution? In my experience, most traders don't need a new strategy. They need a simpler framework that helps control their risk and their psychology. That's actually the entire idea behind my ebook, Futures Trading with One Contract, a simple concept and framework for prop firm traders. The core concept is extremely simple. Instead of trying to pass evaluations by trading bigger, you structure your trading around a single contract and the math potential behind it. One contract does something powerful psychologically. It removes the pressure. It keeps your emotions stable. and it makes it much easier to execute your plan more consistently. In the ebook, I break down a few important ideas. First is what I call the power of one, using a single contract as a psychological cheat code to stay calm and disciplined. Second is the 1-to-1+ framework, which is a math-based approach designed to work around a realistic 50% win rate while still capturing higher reward opportunities. There's also something I call the loss guardrail, which helps protect your emotional capital by preventing those days where traders spiral and blow their account. And I also walk through a scaling roadmap so traders can eventually grow their income without increasing their individual account drawdown risk. A lot of traders spend hundreds of dollars on evaluation resets without ever changing their approach. But the reality is that passing a prop firm challenge isn't about trading bigger or finding some secret indicator. It's about structure, discipline, and letting the math work over time. That's the entire philosophy behind my one contract framework. If you're currently working on passing a prop firm evaluation and want a structured approach that prioritizes discipline and risk control, you can check out my website at futurestradingonecontract.com or in the link in the description of this video. There is also a resource hub page with some free downloads like trade trackers and more. And if you found this video helpful, please let me know in the comments. And let me know, what mistake do you think causes traders to fail prop firm evaluations the most? Thanks for watching. Good luck in your trading journey, and we'll see you in the markets.